everybody, and welcome back to Bullish on Business. And we are very, very lucky to have Greg Friedman with us on the podcast, the CEO of the Peachtree Group. How you doing today, Greg?
I'm doing good. It's good to be here today with you, Rose. So thank you
Thank
for having
you.
me.
You're welcome. Well, we're going to spotlight, we love to spotlight visionaries who are shaping the future of business, innovation, and investment. And today, I'm thrilled to introduce a powerhouse in hospitality and real estate, Greg Friedman, the CEO and co-founder of Peachtree Group. Over the past 16 years, Greg has led Peachtree through more than $8 billion that is, in hotel acquisitions, investments, and developments. He's a true deal architect with a deep understanding of capital structures, financing, and asset management. Under his leadership, Peachtree has evolved into an integrated platform spanning credit, development, management, and capital markets. And most recently, it's been making bold moves in the EB5 investment space, launching 4 new regional centers and earning multiple I-956F project approvals. Greg's journey is more than a story of financial success. It's a lesson in strategic vision, resilience, and leadership in an ever-changing industry, from rebranding Peachtree from a hotel group into a multifaceted investment powerhouse to championing investor trust and community impact. His influence reaches far beyond the boardroom. So buckle up. We're about to dive deep into the world of hospitality, capital, and human connection with one of the industry's most forward-thinking leaders. Hey again, Greg, welcome to the Bullish on Business podcast.
Yeah, thank you again. And just one thing to mention, because you mentioned 8 billion. Actually, we've done well over 12 billion in total
Whoa.
investments since starting the business in 2007. So, originally started the business in 2007. We're a private equity firm, invest across commercial real estate. You did a great job introducing us, but we do make investments across all commercial real estate property types. We're very active across the credit space. A lot of people do know us for the hotel space because we own a large portfolio of Marriott, Hilton branded hotels across the US, mostly limited select service extended stay hotels. But we do have a lot of exposure across all the property types on the credit side, and we're super proud of what we've been able to do over the last, since starting the business in 2007 till now. So over the last 18 years.
Wow. Well, that dovetails perfectly into our next question, and I appreciate that. Greg, you've been leading Peachtree for nearly 2 decades. What first pulled you into hospitality, real estate, and venture capital? And what keeps you excited about it today after that many years?
Yeah, so the hotel business, because being a private equity firm, at the end of the day, we're always about mispriced risk. We're about finding investment opportunities where we can get outsized returns relative to the risk that we're taking on those investments. And the hospitality space has always been super compelling because it's always heavily dislocated because you're dealing with a nightly business, which presents its own challenges because you have no certainty of cash flows for tomorrow because you have people staying for one night at a time. And unfortunately, when you have events like the pandemic or the great financial crisis, you can go from having record high level of performance, where your occupancy levels and average daily rates that you're charging, where you're doing really well, and then all of a sudden it can fall to the bottom very quickly, like we saw during the pandemic specifically, and even during the great financial crisis. But the reason I mentioned those events is that there's always these events and micro events that occur in these different submarkets. And if you're a very strategic, very smart investor, you can find mispriced risk to your benefit in many cases in these markets where you can buy into these assets if you're buying on the equity side or even doing lending, where you're able to make these investments and attach at levels that are well below the long-term intrinsic values of these assets. So that's where you get to that mispriced risk. And it makes it compelling for us as a firm because you can, really, if you do it correctly, you can put yourself in a position to, ultimately have really great outcomes on the investments that you make in that space.
Awesome. Well, we have a lot of people in our audience who focus on the EB5 space, and you have a regional center strategy. Peachtree has now 4 of these USCIS approved regional centers: South, Northeast, Midwest, and West. What strategic advantages are you seeing by filing under your own RC versions versus third-party centers? Is it speed? Is it control or cost of capital?
It's really a combination of all those. So it's being able to, really have more control in the process itself. Because you start bringing in third parties, and they all have their own motivations. And what we're trying to do is be very efficient in our execution. We're trying to, bring speed to individuals in the EB5 process to make sure they have success in their outcome. And a lot of them are, very focused on the timing and so forth. So I think it allows us to help speed up the process as much as we can. It, helps, potentially bring down the costs and things like that as well. And so it's, I think our platform, though, as a company, when you look at other EB5 sponsors, and, there's a lot of great groups out there. So I hate to talk negative about any of these groups because it's really not being negative. It's just, I think we built a better mousetrap where we've really internalized that whole process in the EB5 side. And more importantly, we're an investment company at the end of the day. So we have a lending platform that does direct lending. And through the EB5 program, we're going out and making direct loans to real estate owners that are developing new properties, creating all these jobs, which is the real economic driver to the EB5 program, and why it should continue to exist is, all the good that it does through that economic development of creating jobs here in the US for US citizens. And so it's, we've been able to have, success in the program. We feel like, again, we have that better mousetrap, given the fact that we're able to go in and, we're able to source loans, investment opportunities, these loans that we're making. And then, we have the regional centers that we control as well. So it's, it becomes a win-win situation for potential, for potential individuals looking to, invest through the EB5 program.
You must have really cracked the code, because you must have the playbook for fast approvals. Your home 2 suites, Boone, I-956F cleared in 5 months, far faster than posted timelines. What specific process disciplines? What's your secret? Are you willing to share? Underwriting, economic studies, council coordination? What really drove that speed?
Yeah, I mean, I don't know if I have the exact answer other than we've assembled an incredible team internally because, corporately, because again, I think we probably have more depth than the typical EB5 group that's out there. Because I think a lot of them tend to be more of a one-trick pony. But we do have diversification of product offerings and things like that, as I talked about. But we have a lot of, I would say, a lot of, just very strong talent internally, and especially across our EB5 program. Adam Green, who runs that program for us, is, very skilled, very knowledgeable of the program. We have a strong investment team that's, making the decisions when we're making these loans and so forth. So I think we're just very fortunate that we have the right team. So we've got the right, we have the right individuals, and we've, been able to source the right type of projects, which has allowed for us to, have success in executing under the EB5 program.
Fantastic. I have heard Adam's amazing from the roar on the floor. I've done a little bit of research. I've tried to do my homework, and I've got a case study here on Palmdale for town place suites in Palmdale, 31 investors, high unemployment, TEI. What were the deciding factors, like the demanding drivers, underwriting assumptions, and capital stock split between owner equity, EB5 senior loan, and any mezzanine or bank debt?
Yeah, so so in that project, we raised EB5 as the first mortgage loan on that property, right? So originally we were going to get a bank loan, but then the program, we did have a loan in place at some point there. But we looked at this project as just given from a standpoint of the location of the property, it's a really, good location where there's a lot of demand from like defense companies, that are defense, basically these defensive contractors that are providing stuff for the US government. When I say defense, but they're, providing, you have like a lot of just well-known companies that are based there. You have a huge military base that's there in Palmdale as well. That's a huge demand driver. So it's the aerospace industry is big there through the Air Force and so forth. So there's just a lot of positives to that market and a lot of stability to demand drivers for lodging. We have a great brand with the Marriott brand that's
Right.
associated with that property. But it was, when we did that project originally, we were just going to, capitalize it with a senior loan and then us putting up the equity. But to answer your question, this is a perfect example where, we put up, call it, roughly about, 25% of the, equity needed for that project in cash. And then we were going to get a first mortgage loan. And ultimately we took, instead of doing a first mortgage loan, we actually ended up setting up that EB5 loan that's serving as the first mortgage loan for that project. So it's
What a mix. What a
yeah,
good
so
mix.
so we've de-risked it from our perspective for the EB5 investors because of where they sit in the capital stack, and it's a well located project. So I think it's one that should be successful for all EB5 investors.
I think you've got something going there for sure. I'm gonna make a little softer question this time. So Peachtree, let's talk about culture. Let's talk about people for a minute. Peachtree manages, as you stated, billions and lots of moving parts. How do you really, from your point of view, keep your team aligned and motivated across so many verticals? You must have a motivated team. You're in two big cities. You're in Austin, you're in Atlanta, and many other places, I'm sure, in between. How do you do it? How do you keep them aligned and keep them really motivated to deliver?
Sure. So we do it through a couple different means. One way is the financial side where where the team is compensated based on the success that they're having individually as well as the team itself. So we do it through financial compensation. The other way is how you treat the team. I'm big on, having transparency, across what's working, what's not working, what we're actually working on. So everyone on the team can be on the same page because I do think everyone's got to be aligned and you got to have sort of an alignment of interests. And a lot of that alignment of interests is created through the way you're compensating individuals, but also in how you're communicating to them as well and providing that transparency and so forth. So I think that's, that is the greatest way. And then, I would say the third component to it is making sure you're hiring the right individuals, having the right chemistry across the team, so that everyone, respects each other, that, even though hopefully you have very smooth communication, but more importantly, everyone's respecting and, acting in a manner to really see the success of the team versus focusing on their individual self, but also, it's one of those that you want to make sure you have individuals that are very entrepreneurial because at the end of the day, although we have about 300 corporate team members, we're still a smaller company where we have that entrepreneurial spirit, and we want to see that we have team members that are willing to get gritty and really willing to have that entrepreneurial spirit and how they operate daily. And so that's just making sure you hire that right, team, and then again overlaying it with the right compensation type programs along with communication and transparency.
Well, that's certainly my heart. I have a heart of an entrepreneur, and I love the authenticity that I've seen from you and your team. I'm not surprised. So let's go back to Techie. Case study. And this one is another one that just grabs me because of the jobs here. So let's talk about Madison Bradenton. Bradenton shows 46 million senior EB5 mortgage, 992 projected jobs, 17.1 per investor. I'm gonna cry. This is
Right.
amazing. Walk us through this, please, Greg. This job creation methodology. How the heck are you doing this? And how do you stress test? How do you really stress test this in the job counts against construction timing and operating the whole ramp up? Sorry, I'm a little bit, my heart's fluttering with this one. This case study is
Right.
unbelievable.
Yeah. So, I mean, as you point out, you got 17 jobs that are being created for every 10 jobs, because you only need really 10 jobs to
Ooh,
be created.
10,
So you have,
right.
yeah. So you have, call it 1.7 times coverage. So, for the investor, they're very safe through the EB-5 program because you have more than enough jobs or should have more than enough jobs. Anything can happen, I guess. So I'll put that as a cautionary note. But the reality is we're very confident that the jobs that are projected to be created, which a third party is validating that, and we're actually watching the job creation and so forth. But we're very confident in that number. And I think that is something that we take very serious because the success of this program is really purely based on job creation. And so it's very critical that these jobs are truly being created, and obviously we have economic studies and things like that, and we know what type of properties they are and what they're going to employ directly or indirectly and so forth. And so we have those economic studies to help validate, what's happening there.
Wow, thank you for that. Let's talk a little bit about those investors. You've got 31 on this project and many on the others. So how do you align it? Several releases emphasize meaningful owner equity alongside of EB-5. How do you size sponsor equity to signal alignment without overcapitalizing projects? Are there any internal hurdle rates that you can share with us? Or is that secret sauce?
Yeah, I mean, we like typically, and maybe make sure I'm answering your question correctly, but usually we're doing a senior loan, right? So we're making a first mortgage loan. In some cases, maybe it's maybe structured as mezz, but in most cases, it is a first mortgage loan that we're making on these projects. And so we're making this first mortgage loan. And usually the sponsor being the borrower is putting up, call it 20 to 30%, in some cases a little bit more cash equity into these projects. So this is not, we want to see that they actually have cash equity that is in a subordinate position to our loan because we're in that senior position, we're in that first mortgage
Okay,
position.
that
And
makes
so that's what we want to see so that the borrower is committed to the project. If something ever happens, and this is where I think we have, from a standpoint of, individuals that invest with us through the EB-5 program, I think they get a huge benefit is that not only have we been a lender over the last, 15 years as a firm, my background was banking and lending for about a decade before starting Peachtree. But if something ever goes wrong, because we do all the underwriting like a traditional bank does, but when we're underwriting these deals, we're looking at it as an owner of real estate because we own a lot of real estate. We obviously service a lot of loans too. So we're looking at it both as a traditional lender and we're looking at it as an owner of real estate. So we get the challenges of owning real estate. We also get the challenges of being a lender. And so we feel like we do a more thorough underwriting of these credits or investment opportunities on the senior debt side. And so if something ever goes wrong, unlike a traditional bank or even some of these other lenders within or other groups in the EB-5 space, if something goes wrong, they've got to pick up the phone and call a third party to help them figure out what to do. In the case of all these projects, if something ever goes wrong internally, we have teams that are set up that we can figure out the asset management challenges, the operating challenges. We can figure all that out internally because we already do that in-house. And so we already have teams that are set up to deal with owning real estate, dealing with, issues that may come up with insurance and property taxes, or operational challenges at these assets. And that gives us just a huge advantage in not only, when we originate loans and making sure we make the right investments, because we're looking at this as, potentially, which, again, And one thing I haven't stated, but over 97% of the time, we've made over 700 credit investments, and over 97% of the time, we get paid off through the borrower. So it's been very few times we've ever had to, take back the property and enforce our, rights under the loan documents. But if we did, we do have the ability to step in, stabilize the situation, and really maximize the value of the asset and not be forced to go liquidate or make a bad decision due to lack of knowledge, because we have all that knowledge in-house.
It's a great track record, and the depth and breadth of your team is amazing. You're still placing big bets in hotels, though, even with the name change. Plus the AC Moxie 19 Stories in Dallas. How are you reading supply pipelines, RevPAR recovery, and rate/occupancy risk for the next couple of years of projects?
Yeah, so it's sort of interesting. This year has been really challenging for the hotel space. So if you're if you're at the upper end, and this is really speaking to the US lodging space. So I'm talking really about the US market here on the mainland, but it's, I would say the luxury side, the hotel space has done, relatively well this year. I would say that more the mid-tier space has been flat from a performance perspective. RevPAR has, grown in most markets, maybe, anywhere from 0 to 3%. So it's been relatively flat compared to what we've seen over the last several years coming out of COVID. And, operating costs have continued to grow just with immigration reform that has put more pressure on, cost of labor and things like that. Now, a lot of these challenges are short-term issues, because, one thing you point out is the supply pipeline, and it's very hard for anyone to build a new hotel today. It's very hard to get new projects out of the ground. And so supply is drying up, or has really dried up. Demand historically has grown at about 2% a year. Supply is projected to grow at 1% or less a year for the next several years. So, we feel like there's going to be a huge imbalance of demand growth, versus, supply growth, which is, great for an investor in the hotel space here in the US long term. And so it's one of those where when you look 3 to 5 years out, I think the lodging space is really set up to really excel. And I think a lot of developers and owners will probably, end up probably beating their projections due to that lack of new supply that's getting delivered here in the US on the lodging side.
Well, you certainly have the lessons in the field, and hospitality is a tough business. With that and your depth, will you share with us one lesson you've learned, like the hard way, that still guides your decisions today?
Yeah, I mean, there's been tons of lessons that I've learned, and probably, I mean, obviously, some of the lessons are, lessons that, we learned going back through the great financial crisis, because that's where you really learn a lot of good information. And I'm just trying to think, off the top of my head, probably some of the biggest lessons is making sure you have the right team on the ground, like, so as it relates to hotel properties, operations, although it's real estate at the end of the day. And a lot of times people, when they see real estate, they're like, oh, I can buy a good piece of real estate and it's going to work itself out. But the hotel business is very operate like compared to any other property types. And, when you look across the commercial real estate landscape, hotels is one of the few where you can have the best located hotel, and if you have the wrong team on the ground or the wrong brand, as it relates to the demand, what's driving demand in that location, you're going to potentially fail. You're going to have failure. The investment's not going to work out the way you expected. So it's very critical to have the right team in place to operate that asset. It's very critical that you're, focusing on not only putting heads in beds, but controlling expenses. And then you need the right brand to drive reservations. Because I see so many times someone tries to get into like the hotel business, because we've talked about hotels a lot today. They try to get in the hotel business and they're like, hey, I got this great piece of land. And then they're like, they go out to the different brands, and some of these brands that have less, they're really pioneering at this point in time, because some of these brands just don't have the distribution. and but they'll offer you a lot of money to take on their brand. And I see it so many times that someone will take the key money that they're getting versus taking the better brand for the source of demand in that market. And then the hotel itself, once it opens, does not ramp or doesn't perform at the level that they expect. And the returns end up being a lot less, or in many cases, they end up losing money in that investment. So that's probably one of the biggest lessons I could give anyone listening to this if you're
Excellent.
thinking about
Yeah,
getting
that
in the
makes a
hotel
lot of
business.
sense. Quality, quality, quality.
Yep.
So let's switch gears a little bit to Washington, D.C. A lot going on out there lately, especially in immigration. There's a lot of risk with governance, and we have the USCIS scrutiny and the industry churn. And we'll talk a little bit about the governance controls, and that I'm going to push that to the back for a sec. I want to talk to you more about the future and lobbying Washington and working to make sure EB-5, it sounds like you're a fan of EB-5, and I know that there's a lot of things happening. What's your opinion, if you're willing to share, on where all this is heading?
Yeah, so I don't really know where it's headed. I mean, Adam maybe could give you a better idea. I don't even think he really knows. I think it's all speculation at this point, but I do think here's the thing, that if, EB-5 should be something that's supported by all sides, no matter, I don't care what your political, affiliation is, don't care if you don't have a political affiliation. EB-5, if you're an American, it's probably one of the greatest programs out there because it's legal immigration. So you're legally immigrating to the US by going through this program. You're creating jobs for current American citizens, okay? So not only are you going through through a very vetted process for legal immigration, and you're creating a lot of jobs. I mean, the whole entire US is based on immigrants, right? Like, so I'm a big believer that we should continue to have people immigrate to the US in a legal format, of course. And that accomplishes that. But more importantly, it creates all this economic development for these local communities across the US. And so it's something that I believe, anyone that's in Congress, I mean, I'd be shocked if they don't support the program, if they really understand what's happening with it, because this is driving economic development for their local constituents. So, I mean, this should be, anyone across the US should be promoting this program over any of these other potential ways to immigrate to the US, because this is the one thing that you can actually point to job creation. Okay. So you're doing economic development, you're helping drive the economy, and you're getting, someone that's going to immigrate to the US is now doing it in a legal format. So I don't see, I mean, this is
That's a
just,
win. It's a win-win-win-win.
it's a win-win.
Can't
It's
even
immigration.
count all
Yeah.
the wins, right? It's a
Yeah.
win
It's
for the community,
immigration
win for
on it.
it's a big
Exactly. It's
winner.
legal immigration on steroids. So is the way I look
Totally.
at it. So it's
So
just,
you and I are totally in agreement with that. So let's get back to some of the pains that USCIS puts you through as a regional center, the scrutiny, the industry churn, and what are they have all these controls, escrow mechanics, third-party monitoring, audit cadence to keep the EB-5 investors protected and projects on track. How do you work with that? I know it's probably an Adam question again, but that is, from what I've seen, it's kind of one of those areas that do you lean heavily on your immigration attorney team?
yeah. I mean, we lean on counsel to help us through it. We have, individuals internally, externally. So, I mean, we have a lot of people involved. So, I mean, it's a very much, there's a lot of oversight, a lot of vetting that goes through that process, which again goes back to our discussion before. It's almost, it's almost crazy that that this program wouldn't just be permanent, a permanent program long term because of the scrutiny you have to go through as it relates to all this.
Right. So, in wrapping this up, when you imagine Peachtree 10 years from now, what do you hope people will say about your company and the role it played in all these communities and creating all of these jobs and making all these beautiful hotels and apartments and places for people to live.
Yeah, so I mean, hopefully, because we have multiple stakeholders, right? Like we have, individuals that are like coming in through the EB-5 program. We have, traditional groups that are, investing with us at some level. We have users of our products. If it's hotels, we have the guests staying at our hotels, at multifamily properties. You have the tenants and so forth. And same for, office retail and, some of the other property types. So, I mean, ultimately, I hope when we wake up 10 years from now, people really not only appreciate the, what we were able to do in all these different communities across the US, but more importantly, we really were able to do it the right way. And, people really appreciate the fact that we were able to have all the success, make all these investments and, continue to not only do it the right way, but also produce outcomes that were, in line or outsized to what the different individuals that were involved with these opportunities and what their expectations were. So we're always looking to, overachieve or to, hit the targets that we set out or, really want to overachieve those targets.
Fantastic. Well, before we wrap it up, is there anything you'd like to share with the audience before we close out this show?
I think that's really it. I mean, I know we talked a lot about hotels, EB-5, and maybe just to sort of wrap it up. I mean, hopefully everyone that's listening, if you're not educated on EB-5, I would highly recommend you get educated on the program itself, just because we have talked about it a lot. I'm always happy to, if anyone ever has interest in talking about commercial real estate, they want to talk about private credit, because we do a lot of private credit in commercial real estate, or want to talk about the hotel business, happy to talk to them over the phone. But I think everyone supporting the EB-5 program, just knowing that's just a source of liquidity for a market, especially like today, that's very dislocated as it relates to both credit and equity, for commercial real estate, especially for new development projects. I mean, this is an incredible way to help capitalize those projects is the EB-5 program. So it's helping provide stability in a very, in a very dislocated market. So I think it's something I would hope that, your listeners are getting more educated on, and they're helping push, different politicians to help support the program, because I do think it's something that should get, it should get extended and should be extended permanently. So.
Permanently. I appreciate that, and I agree with you. Well, thank you so much, Greg, and thank you for your open and honest. I really respect your opinion, your years in the business, and your depth and breadth of your skills and the team there at Peachtree. And with that, we're going to close it out, and we'll see you guys all next time on Bullish on Business. Thanks a lot, Greg. Bye.